Like, comment, share and subscribe.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand with the latest cues in the stock markets, the way the trade is happening in terms of the benchmark index moves, also the sectoral indices and the way the stocks are moving also in trade today. We'll also take a look at how the experts are viewing the current market setup and what strategies they are advising investors to adopt at this point in time. But first up, a look at how the Nifty and the Sensex are moving at this hour. Well, halftime through and we are seeing a listless trade, slightly flattish with a negative bias for the Nifty and the Sensex. 17,538 currently, 15 points down for the Nifty. About 40 points of a decline for the Sensex as well, 59,700. That's where it is trading at. So still drifting lower after touching those 1.5% lows yesterday as well. It again looks like the fifth consecutive session where we may see some kind of volatile moves, especially because it is the expiry session as well. So we are going to be looking at a whole host of factors, including the India VIX levels that currently are actually hovering higher. If you say currently the India VIX levels are at 15.1, although down by almost 2.5%. Yesterday we'd seen a sharp run up right there. The market breadth remains divided with 25 declines to 25 advances at this point in time. The stocks that are still creating pressure on the markets, of course, Adani Group stocks still under pressure. Adani Enterprises down by 2%, 1373. Asian Paints is down by 2.5%. That's the top loser right there on your screens. IndusInd Bank down by 2%. Apart from this, it's Titan and HDFC Life, the other drags at this point in time. And HDFC Bank also lower by almost 1%. What's still holding up it in the markets right now? It's ITC that's up 2.5% at 393. UPL, Coal India, Hindalco, TCS, the other names that are up by over 1% in trade today. But time now to welcome our guest for the day. Kranthi Bathini joins in from WealthMills Securities, Director of Equity Research. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, like I always ask you, what's really happening and what is the trade setup really looking like to you as far as the markets are concerned? We've seen a listless trade since the budget really happened. And after that, of course, the Adani Group fiasco and the carnage on the D Street really took over as the center stage. But when will the markets be able to move on from Adani Group and the developments right there? And what fresh triggers are we looking at?
Sakshi, as this is the time we need to ponder on, we are without a shadow of doubt, we are in a time-wise correction right now. That's what we are witnessing in the market, and market is spending some more time in this range. So to break this range, to come out of this consolidation phase, either market has to give a breakup upside or a downside. What we witnessed yesterday is from that trade, market have given a downside breakup. And right now, still markets are in a consolidation phase. The major triggers right now, how the Federal Reserve decisions are going to be. Right now, we are in a phase of tightening of the liquidity across the globe. And also, what the worrying factor is the inflation. But on a other side of the coin, the good thing is when the inflation is triggering, there are positive factors one can derive from the inflation that is growth is intact. But the central banks across the globe, they started a wage against the inflation. They are fighting a war against inflation. They want to bring down the inflation. Whenever they try to do measures that bring down the inflation, there will be a medium to short-term kind of hiccups will be there in the equity markets. So investors need to be little bit wise. Don't get into the companies which have a high amount of exposures, high amount of debt exposures at this point of time. Try to be in the cash rich companies, predominantly the large cap companies, because the reason is whenever these liquidity conditions prevails, tightening of liquidity conditions prevails, the mid and small cap companies cannot do their expansion plans because it needs a lot of debt. If they
Yeah.
raise the debt also, they need to be in a position to use this debt for the right use and the right cause. So that's what the dichotomy currently is staying in the market. Overall, we are in a consolidation phase right now. We are still not call this as a bear market. We are absolutely in a bull market, but in a bull market, we are in a consolidation phase. Right now,
Right.
some amount of money which is supposed to come to India that is getting channelized to some other emerging market like Korea and China. That also hampering the FII flows into India.
Yeah, absolutely. We'll talk about that also. But again, India has slipped to the seventh position in the world in terms of market cap. And I wanted to understand, is it a large part of it, does it go to the Adani Group stocks and the way the stocks have slipped from their 52-week high levels and the weightage that the Adani Group really carries in the Indian stock markets? Is it that, or are the worries largely around the macros, like you pointed out, the Fed minutes that indicated hikes to continue going forward from here, inflationary concern? Is that the bigger worry for the markets, or is it the Adani Group stocks and the developments right here?
Sakshi, if you have to attribute the entire saga in this market, partially the Adani Group events have given some kind of trigger for this fall. Okay, but it is more about the global macro, global liquidity condition at a larger picture. Adani Group is small portion in this entire saga of events that are happening. Timely, the events are taking place right now, but it's more about the global liquidity and the global growth and the inflationary conditions across the globe. One thing we need to keep in mind, Sakshi, in 2022, India was one of the outperforming market across the global markets. So in the initial stage of the beginning of the year, we can see some kind of consolidation with respect to the valuations and with respect to the relative outperformance is concerned. So we are taking a pause in terms of the outperformance at this point of time, because global markets the flows are getting into some other markets where the relative valuations are attractive. The hot money is currently not coming into Indian markets. That's what we can conceive at this point of time.
Okay, a lot of other news flows are also coming into picture today. I'll talk about a few stocks and then we can focus on the larger sectors and the investors' approach right there. The one stock that is in focus today is Zee Entertainment, and the stock has slipped about 10-14% intraday already. Right now it's down by 9% right there at 187. I wanted your thoughts on this NCLT admission and IndusInd Bank's insolvency plea against Zee. And guessing this is a bit of a negative news for Zee Entertainment, but what goes forward from here and how should investors be looking at this stock now?
Sakshi, if you remember, G was one of the momentous stock, and the stock was in a momentum zone 6-7 months back when the news of Sony merger that has been announced with respect to G. We need to see what kind of delinquency and is there any amicable negotiation that might come up. We need to see at this point of time how the liquidity condition of the cash flows of the G, as NCLT has admitted, IndusInd Bank's suit. So we need to wait and watch at this point of time.
Okay, understood that as well. What about the other sectors that are giving you promising, confidence as of now? Are you looking at this theme of early onset of summer at all? And do you think investors with a short to medium term perspective can look at stocks like a Voltas or a Symphony or a Havells or a Crompton Greaves, as one is expecting that the sales of fans, of coolers, ACs may actually pick up pace earlier than expected because of the rising temperatures and the heat wave concerns?
Yeah, definitely, Sakshi. If a investor is looking for a momentum zone or try to take the advantage of the seasonal changes and the initial reports of the summer is going to be much hotter than the earlier summer, definitely the sales of different home appliances companies can be on a higher note, as you rightly mentioned. Companies like Havells India are Godrej appliances, are companies like Whirlpool, Voltas, Blue Star. These are the companies one can keep on their radar. Havells gives much more choice with respect to their product proposition is concerned. And also on a lighter note, people can look at companies like Pidilite. Also, Pidilite have a one chemical which which will be applied on the houses, which is a heat protector. So there are different sort of companies one can analyze at a macro level, and they can make their choices in the medium to short term.
Okay, what about the FMCG sector? Can that also reap the benefits of this? Most of the companies which sell colas and ice creams right there, can that also be on investors' radar?
Yes, because the majority of their revenues comes during this season, like companies like Varun Beverages,
Yeah.
which sells brands like Pepsi and the other different soft drinks. So the stock has run up a lot. The stock has given more than 100% return, stock like Varun Beverages. But during this weakness of this market, one can chip into these kind of names, and stocks like HUL also they can keep on their radar. But Warren Beverages can be the stock for summer.
Okay, Varun Beverages can be the stock of the summer as well. What are the other sectors that you're looking at currently? I mean, what about the metals? I think steel prices are actually at 7-year high. They are soaring. What could that mean for those investors who are holding on to some metal names? Today, the Nifty metal is also up by 0.2% odd right here.
Sakshi, as one of the key concern of the globe is inflationary nature. That means the growth is at a pace. So whenever the growth is at pace, the inflation becomes a concern. One of the sector that is going to take the advantage is the base metal kind of proposition. That's where we can see some kind of cherry picking is happening with respect to metal stocks are concerned. So the question here is whether this growth can sustain over a period of time. Okay, are the policymakers across the globe, they are going to make a soft landing of the growth? Okay, this is where the crux right now. But my advice to the investors is stick to the large caps names in the metal space, and which can come across about this the growth expansion measures that are taking place across the globe.
Okay, understood that as well. Let me also take a few names, all those stocks that are in focus today because of the news flows coming in on that. I'll just talk about some of the stocks from the hotels basket, like Lemon Tree Hotels. The company has announced its latest signing, Lemon Tree Hotel, Bhopal, Madhya Pradesh. The property is expected to be operational by December of 2023. It will be managed by Carnation Hotels as well, which is a wholly owned subsidiary, and the management of Lemon Tree Hotels as well. We've seen a sharp pickup in the travel and tourism space as well after the 2.5, 3 years of COVID pandemic. We've been seeing that the hotels are full as and when the summer is approaching. Even now, the holidays season also was actually quite bounced that we had seen over there. Some of the uptick has also been seen in their results as well. How should one be really approaching stocks like Lemon Tree Hotels and the entire hotels hospitality basket?
Yeah, Sakshi, as you rightly said, as we there is a unlocking of trade that's happening in the hotel and travel industry. So these other stocks are definitely going to take the benefit. But the whole lot of hotel stocks have been multipliers. If you see their 2 years chart, as you mentioned, Lemon Tree Hotel, it was trading around 7-8 rupees during the pandemic time, and today is at about 70 rupees. So the stock has, if anyone have the courage to buy at that bottom, they made 10 times return at this point of time. But the crux here is one need to be stock specific in terms of their hotels, because we are as we are entering into a high liquidity, tightening of the liquidity position. How the hotel industry is going to manage their debt, that's extremely important though. So despite of uptick in this heightened activity in the hotel industry, one need to stick to the large brands at this point of time, and where the valuations are attractive to make take the advantage in the coming days.
All right, understood that. Well, thank you so much, Mr. Bathini, for being with us on this show and explaining to us how should be investors approaching these several sectors that are in focus because of the news flows as well, and overall markets also, where are they headed and what should be the best approach that investors must adopt right there too. Many thanks for joining us. Fifth consecutive session, and the markets are still down in trade. About 60 odd points of a cut for the Sensex right now, 59,686. That's the level at which it is trading at. 25 points of a cut for the Nifty 52, 17,530 currently at this point in time. We'll keep an eye out on how the markets are trading last 2.5 hours, if there is any bounce, or will we actually close the series on a negative note as well. We'll keep an eye out on all of these, and for that you should stick with us on Business Today TV. Don't forget to subscribe to this platform, and also you can continue to engage with us on our social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.
The wealth erosion in Adani Group stocks continues. The Adani Empire's market capitalization has fallen below the $100 billion mark, making it even lesser than the top three